I'm a partner at LEM Capital, a registered investment advisor. Everything I share today is for informational purposes only and shouldn't be taken as investment advice or a solicitation. Any views on market conditions or strategy reflect our current thinking and are subject to change.
This is Beyond the Resume, the podcast that brings you the stories, advice, and insights behind some of the most successful people in real estate. Beyond the Resume is brought to you by Jackson Lucas Executive Search, the industry leader in human capital solutions. Here is Chris Papa and Lisa Flicker.
Jen Clausen, thank you for coming on the podcast. How are you doing today?
I'm doing well. Thanks for having me, Chris. I appreciate the opportunity to connect with you and Lisa to meet you.
Thanks for coming on. And you are we'll go over the back of the baseball card type of thing. You are a partner at LEM, or as we like to call it, LEM. No one calls it LEM though, do they?
We have before. We've had some unfortunate recordings where it's like, well, when I started partnering with LEM, and we're all like, LEM? Who named something LEM? Like, it's LEM. But, shouldn't put a vowel in the middle of two consonants. That's on the partners who originally did that.
Are, and you're a partner. You're a partner there, so you're a partner.
I am a partner now, but the firm was started 25 years ago. And so the guys who came up with the original name, who are still partners today, I became a partner in 22, been with the firm for a decade this summer. And I joined when we were raising our fourth fund. And now we're on fund 7. So it's been a fun, wild ride. I lead our capital raising, investor relations, and also our operations.
Well, fun fact, just regarding naming, our name's Jackson Lucas, name of our company. It's literally named after my son, and who's Lucas, and my Anthony Fonzo, my founding partner's son, Jackson. And they're both the same age. It just made sense. But we didn't realize Jackson Lewis is a big law firm, so we always get called that, mistaken for that. Jackson Hewitt, I didn't even think of that one. So it's the tax people, right? So anyhow, yes. So do you want to tell the world more about LEM?
Yeah, I'd love
and
to.
just you have a long history.
So we've been around for 25 years. Today, our business is value-add multifamily investments in growth markets around the U.S. So we're buying existing cash-flowing properties where there's an opportunity to renovate and manage better. And that's what we've done for the last 15 years. We started out in the structured debt space across all the major commercial real estate asset classes. That was pre-GFC. And then we switched from debt to equity in 2011, post GFC, wanted to be in, an essential asset class because everyone needs a place to live, and wanted to be in more of a position of power in equity versus debt where we could really control the investments and timing of exit.
Right.
It's interesting because you didn't start out in capital raising, but obviously the various roles you had before show that you kind of lead with relationships. Tell us how, what did young Jen want to do and how did you get into capital raising?
My gosh, I wish I'd listened to my dad who told me, take some accounting, take econ. Instead, I got a dual degree in communications and Romance languages, Hispanic studies. So I can speak really well.
I love that.
And really well in Spanish.
Really?
Yeah. Well, I used to. I lived abroad for a year. I dated a Spaniard for like 3 years. And so all of that collectively made me pretty proficient. I'd say living in Philly, I don't get to use it as much as I like to. But, in terms of the narrative and kind of the through line, I graduated in 01, so into the .com bubble. So I appreciate the young students graduating today or into COVID. It was a tough time. And I was fortunate that I had a job. I was actually a currency trader out of school. So not necessarily a connection, but it was for a Mexican bank. So I did it in Spanish. So there was that application
That's awesome.
of that degree.
Oh, so you're really fluent.
Wow. I was really fluent. It's dusty. It's in there. And then I moved back to San Diego. I was in LA at the time, moved back to San Diego, got into commercial real estate. So I was a broker on the office side leading up to the GFC. So I learned and saw that volatility. I'm very thankful to have gone through the last 5 years in the multifamily space as opposed to the office space, since we all know that's been pretty transitional. But it was always marketing. I was meeting people, I was selling things, and I knew I didn't want to stay in San Diego forever. I wanted to get back to the East Coast where I'd gone to school. And I found a job with a hedge fund, and they were raising a global macro hedge fund. And the guy who was the COO had, a target on what he wanted to raise, and he needed someone to help kind of quarterback his momentum. So hired me. I worked with him for 6 years. We doubled AUM. It was an awesome experience. And so that kind of set the stage for the capital raising side. And so I've stayed in that, since 2009. And I found LEM 10 years ago when we were raising Fund 4. And the E in LEM was doing the capital raising. And I said to him at the moment, hire me. I want to be your quarterback of momentum. I never want to be in charge of this. And he was like, he filed that away and he was like, sure. And when I became partner in 22, he's like, remember that conversation and how you didn't want to be in charge? Well, now you're in charge. So go forth and conquer. So it's been, a wild ride, but I love meeting new people, telling our story, really helping articulate why we're different. And, we're a middle market multifamily manager. We invest with operating partners. And so that's unique in that we don't do a variety of asset classes. We only do one asset class. Our team in-house, which is a 20-person team based in Philadelphia, they're all multifamily experts with direct experience. And we play kind of below the bigger behemoth funds that you could name. And then the way we will partner with our operating partners is really unique in that it's super hands-on, very collaborative, and a slightly unique structure relative to other groups that invest with operating partners. And so it's allowed us to achieve a really strong track record. I have this great T-shirt on my desk at work that says DPI is the new IRR, which I show in meetings all the time because you can't spend a paper return, but you can spend dollars back to investors. And so, that's kind of our unique story, our value proposition, and the story I'm telling on a day-to-day basis.
That's awesome. All right, pretend you're a student in college or something. Capital raising sounds cool. You're going out meeting people, you're talking to people, you're getting money. Like, what actually do you do as a capital raiser? Like, how does it work?
Wow, that's a good one, Chris. You do a lot of things. It's not a straight line. I think so. When I talk to a lot of people, and I'm very involved with elevating women in our industry, it's historically commercial real estate is a white male industry, and so I've been very involved in trying to change that profile and help bring in new blood, so to speak. And when people ask me about capital raising versus like acquisitions, I'm like, well, are you a sprinter or are you a marathoner? And it's really, are you a sprinter or are you an ultra marathoner? Because capital raising is not meet, greet, commitment. It is meet, get to know, spend time, share information, bring more insights, like help really engender these relationships. And they're meant to be, cycle resilient relationships where you're going to be partners for 10 to 20 years, not we're doing one deal and then it's done. And so when I'm talking to people who ask about it, I'm like, tell me which personality bucket do you fit in, the first or the second? Because it'll really inform whether you're going to be successful in this role. It's not an easy role, I'd say, especially today. Commercial real estate is kind of the ugly stepchild to traditional private equity, and then certainly to the public markets today, just from a return standpoint. And I'd say this week we're seeing a little bit of a correction on that, and I think we're in a really exciting time to be an investor in real estate because we've really come to a market reset. The market's recalibrated, interest rate environment's much more favorable. And then within multifamily, the supply wave is slowly receding, which will create similar dynamics to what we saw coming out of the GFC. So I think it's a really exciting time to be in that space. But I think for people who want to be a capital raiser, are you good at talking to people? Can you make small talk? Like I have a former colleague who told me, she's like, Jen, I just can't make small talk, but I think I want to be in capital raising. I'm like, well, those two things just like actually don't jive. So we got to pull it out of you or figure out a different way to do something similar.
Do you have, are you out? I guess you start out as like kind of a junior person, right? And you're kind of maybe knocking on doors with a senior person, but like, are you putting together materials? Like, why would people give you, I guess, what do you have to do in order to develop a relationship for someone to give you? I mean, these people are giving you millions of dollars, right? They're not like,
yeah, sometimes hundreds of millions of dollars.
Yeah. So like they need to trust you guys and see a track. Like, what do you have to do in order to get that type of level of security with an investor?
Well, I think transparency is always number one. What we provide to our investors, whether it's a prospective or a new investor, is, first of all, marketing presentation that's going to have our entire track record, our value proposition as we would articulate it to help them understand who we are. So you're in PowerPoint a lot, trying to create a bespoke presentation that meets the need of whoever the profile of investor is that you're talking to. We do quarterly investor letters. We actually, next week, we have our year-end call, which is a Zoom call with our existing investor base, just providing an update of what we're doing. And the interesting thing is, like, our investors range from high net worth investors to public pensions. So that's, $1 million investor to $100 million investor. And they have different needs and wants relative to performance. The high net worth cares more about, when are my distributions, when are my capital calls, and the pension, just, they have a higher tolerance for the uncertainty of those first two things, and they really want to understand, like, what's happening in the portfolio, what's driving performance, where are the trouble spots. And so some of this happens just in regular catch-up calls or lunches or breakfasts or what have you, or in the more formal setting, like I mentioned, in our investor presentations and calls.
And it's interesting because unlike most of the other roles in commercial real estate, I feel like the path to get to where you are is ambiguous, right? You can come in with an investment background, you can come in. And so if you were advising somebody right now who wanted to, they feel like they're an extrovert and they enjoy making small talk and they think they'd be good at capital raising, what do you think the most direct way to get there would be?
It would actually, I'm not sure that this means direct, but I think the thing that would be most powerful of a tool in your toolkit to be effective is to start out in asset management or portfolio management. Because then you really get the understanding of the mechanics of your asset class, how things work, why things work. We, especially today, we're talking a lot about valuations and underwriting. And so understanding all of those components and how they collectively drive performance is really important. I didn't start with any of that. As I mentioned, total liberal arts background. And so it's been on the job, asking lots of questions again, because I didn't understand it maybe the first time, and not being ashamed. Like, this is not where I came from, but I want to learn. So help me learn. And I try to do that with my team, pass on what I've learned. Oh, look at that cutie.
Guest star of the show sometimes.
Love it.
So yeah, I mean, you're a leader now. Like, you rose up the ranks. I mean, like, people, when we get older and we stay with companies, oftentimes some of us go up to the ranks, and I had to learn how to be a leader. Like, how do you lead? Like, what is your style, and what's the culture of the firm?
Yeah, that's a great question. So when I joined, that culture was a founder culture. And now 10 years, later, after I've become a partner 4 years ago, it's the culture of the next generation. And so our head of asset management joined a little bit over 10 years ago. My other partner, Allison, so we were two women partners out of six. She joined 7 years ago. And the three of us represented the key verticals of the business: the investor relations team, the asset management team, and the acquisitions team. And so that's where really the roots of our relationships are. And that's what drives our business. And so the three of us together really understand um, how to drive what we do. And I think we bring a unique collective skill set that, not that three is better than two, because that's what was leading the firm before, but three of the next generation, kind of bringing a different approach to how we invest and how we work with our teammates. Because some of our teammates, we've kind of grown up together, for lack of a better term. And so I'd say that's been the more challenging transition, is how do you go from being a peer to being a, lead coach to, peer
Yeah,
kind of thing. And it's taken a little bit of time, but we've gotten there. Also, we've had some natural transition of team members who've gone on to other things. And so we brought in basically the people that we've hired as opposed to the people that we maybe inherited.
yeah,
And I think we focus a lot on our culture in terms of being cross collaborative. We're not that big of a firm. We're 20 people, but you don't necessarily spend a ton of time with the accounting team if you're on the acquisitions team. And so finding opportunities outside of work where we can connect through volunteerism. We're really involved with Habitat for Humanity Philadelphia,
cool.
do a variety of things with them throughout the year. And through, happy hours, dinners, et cetera, just other ways that we can really get to know each other and help support each other.
I had that problem with or situation where I was peers with people and then I was their boss, and it's like it's a tough. It's very uncomfortable, but I found out yelling is very helpful. Like if you just yell a lot, that seems to be work a lot.
I put
You
on my
get
mom
the
face, and Allison will
you
be
get
like, "Jen, you're putting on your mom face." I'm like, "This needs to get done now." And everyone's like, "Woo, okay, mom face is on. Let's go."
I feel like when you kind of go through that transformation, at some point you're like, oh, I understand when people say it's lonely at the top, what that means. There's like a moment, and I think a lot of senior leaders go through this where you're like, ooh, okay, it is kind of true.
Well, you have no
yeah
one else to complain to except for each other because you're like, I'm complaining about myself if I'm complaining about the situation, right?
yeah. I
So,
hate my boss.
Right. Well,
but the
that
decisions you have to make, the things you have to do that no one appreciates that have to get done, like annual reviews and midterm reviews, like we spend a lot of time really thinking about that so we can be thoughtful and constructive. And when I joined, we did one review at the end of the year and nothing in between. And so we thought, well, that's not helpful to our team. We want them to know, like, are you making the mark? Are you hitting the things, or do you need
Right.
support to get to where you need to go? And so those are the types of tweaks we've made, but it takes a lot of time.
right. And with a 20-person company, it takes a lot of time, but as you scale that company, it it people don't understand why they need to hire some of these ancillary people, HR and things that help with culture until they get to that point in time.
100%.
Um. Yeah. And so, like, it sounds like you guys did a good. So we do a lot of work with succession planning and like having the founder led firms who are then not at some point. Like it's not, and it's extremely hard because the people don't want to let go. The right, like how did you guys do that? Did you have was this like purposeful?
I'd say that originally there was a vision for succession planning that didn't materialize in the way that the two co-founders thought it would. And so what they did is in 2018, they looked outside the firm and they found Allison, my partner. And she came from a really large vertically integrated multifamily group. So she had the other side of the perspective, which I think has been really helpful, articulating to investors what we do and why it's different and why it's valuable. And she came in to lead the acquisitions team. And the goal was to make her a partner. So it's been a very progressive plan. And then in COVID, she and the two co-founders saw Alice or Greg and I as the two leaders she wanted to be with her in the future. And so it's been a pretty great and slow and thoughtful rollout. And it's not only been a rollout internally, but also with our investors and with our peers and the broader audience, where Alice and Greg and I have been the face of the firm with all investor calls and presentations. And our investors have really appreciated that it's been very thoughtful. It's not easy to do and it's not easy to articulate because you're always concerned, like, how is this going to be received by all of those constituent groups? And I'm really grateful that they did it the way they did. Also, Greg and I grew up kind of under Jay and Herb. And so we are really a continuation of how they were running the business. So I think it's been really helpful. But I've heard from a lot of peers missteps or transitions that have been too fast to really be absorbed well by the groups. And that's tough.
Right. And it's a problem when people they want to transition their companies, but they just don't know how to do it. And there's just so much ego involved. And, we joke around like there's, therapy free with the succession planning purchase because it takes a lot to have a founder who's built this company from scratch now say, you know what, let me see if someone else can do this. It's like handing over your child. I would say it's not easy. So you're
Right.
lucky that
Well,
the
and I
company.
imagine you're probably seeing a lot of it right now. I mean, we've gone through this kind of cycle correction where people are maybe run out of patience. Like, I don't want to go through this again. Let's just, hang up the shackles and move on. So I'm curious, are you guys seeing that with clients?
A lot of it. And I think what's also interesting right now is we're going through a moment in time where people are actually thinking about like, what do they want out of life? I feel like I started recruiting 25 years ago, maybe more. And when I did, maybe more, it
No
was
way.
like you
We're
anybody
we're
from like
29 forever, Lisa.
done, 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 and done.
You guys look great.
Thanks, Chris. You do too.
Thank you.
It used to be you could kind of buy anybody if you had the right comp package. And I feel like now there's a lot more work that people put into the the thought process around like, what do I want my life to look like? And even though I could take this job and maybe kind of make that, would I be a lot happier with this job and making that? And what are the trade-offs? And so I think for the founders, sometimes they decide, you know what, it's not, I like it being my stickball bat and I like to make the rules and oftentimes
Hmm.
they sabotage it and it just then you watch the company kind of slowly disintegrate and it's the sad side of the case studies.
Right. Um, yeah, it sounds like you guys are really intentional, which is awesome. Or it seemed like you're intentional. I mean, we deal with we get a lot of inquiries that from people who are doing brokerage who want to be. They're like, yes, my skill set translates well to capital raising. They want that. It's hard for I've have placed people from brokerage, investment sales to capital raising. It's not like it's not easy for clients don't want to like take kind of a risk. There is like a cost benefit too, because somebody with a book, I'm sure, a book of business costs a ton of money to like transfer from one firm to another. So someone with the ramp up time, and if you got chutzpah and you can talk to people, like people can picture you growing into the role. But how I know you said you went to the hedge fund world first, but how did you kind of make your way into an IR capital raising role from the brokerage side? Like, were you just pounding the pavement?
I leveraged my network, frankly, because I was moving from San Diego to New York, so totally different market. And as a broker, half your value is who you know and the market you know, right? So I was obviously departing that. It wasn't like I was going from LA to San Diego. It was cross country. So I knew that staying in brokerage wasn't really an option for me unless I went into like the tenant rep side or something. And so I was ready for that chapter to be done. This was post GFC. Did a lot of I called myself a 501c3. We had a lot of clients and we did a lot of transactions in 2008, 2009, but they weren't really that productive financially. And so I was ready to move to something with a little bit more stability. And so I literally just went through my Rolodex. I called everyone that I could. My dad was a really successful salesperson, and I didn't leverage him I wanted to come to him and say, Dad, I've done this. I found a job in New York. I have a place to stay. I'm moving, not I'm going to go there and figure it out. And so I figured out the whole thing before I left. And I was really proud that I was able to do that. And so I found through a great series of friends, a man that was ex Bear Stearns who had joined this hedge fund, and they finally had a 5-year track record and were ready to go raise institutional capital. But he needed someone that he liked and that he knew he could work with and who could learn the business. And it was a global macro hedge fund. So we were doing a lot of really esoteric trades. I didn't need to understand the business soup to nuts because you were always going to have a trader or the head PM in the meetings with us. But I needed to be able to, do outreach, organize our outreach, help execute from A to Z. And that's where I really just focused on doing that. And then, fast forward, I love the process. I love the relationships, but I did want to be able to like understand my product. We've all lived in an apartment. You can explain value add
Right.
multifamily to anyone. And so it's kind of the polar opposite of, from a product perspective.
Yeah. What's the direction of LEM? Are you guys trying to grow? Are you happy where you are? Are you sticking with like what? Are you just all across the country? Like, what markets are you in?
Yeah, that's a great question. So we're based in Philadelphia. We invest in growth markets around the US, so non-gateway. Think, up and down the East and West Coast, the smile markets.
Mm-hmm.
And where people are moving to, right? Where the cost of living is, still relatively affordable. It's not Manhattan, it's not San Francisco, but we'll invest like outside of those markets where people want to live in the suburbs, where the gut of our renter is making $50,000 to $75,000 a year. So it's like the largest pool of renters in the U.S. So that's
Yeah.
a huge
It's like
demand profile.
workforce housing kind of
Totally
essentially.
workforce
Right?
housing. Yeah, absolutely. Um, And we invest with operating partners around the country. So that's what gives us the flexibility to be in Atlanta or be in Phoenix or be in Austin or not be in those markets if, like today, all of them have a lot of supply. So our most recent acquisition was actually in Southern California. It was in Anaheim. And we
Oh,
bought
cool.
the deal from an original developer. So in terms of what our future is, we will always be value add multifamily managers. Housing's always going to be our expertise. We'll be 25 years old this year, and I'm excited about what our growth is. And our growth will be outside of our fund series. It'll probably be separate accounts, still focused on housing. And the areas that are exciting to me right now is, you know, lowercase a affordable housing, where there's a municipal tax structure. It's a really fragmented opportunity set.
NOAA?
Yes, NOAA. But it's, it's amazing. County to county and state to state, the rules and the opportunities are so disparate, and
Yeah.
you can't just figure it out in one day. And so we've got a lot of our operating partners are already doing it and have been doing it for 5 to 10 years. And so that's an area we're exploring, where it would be, through a separate account vehicle. And the other one, which has become a little bit more politically challenging the last couple of weeks, is there's been a lot of build to rent built around the country.
Mhm.
And at some point, that'll become a value add opportunity. Today, the political landscape around BTR is a little bit complicated, so I'm not sure how productive that one will be, but we'll see.
We just did a podcast last week with AJ Jackson from Leo Impact Capital, which is are you familiar with them? They do NOAA. They're part of JER or JRE.
Yeah.
They're so we did a webinar on NOAA and stuff. Yeah, it's workforce with maybe some sort of municipalities involved, but yeah, I mean, it's such a missing middle and so essential for essential workers and just workers, and it lacks a lot of emphasis, I think, and I think it's nice to see you and AJ and other folks getting involved with that, because it's capital A affordable is awesome, but it's like we can't just rely on these tax credits and stuff.
Right.
I think
Well, and
so.
it's a very specific expertise to know how to do that from a compliance perspective. And you think about the median home price is over 400,000 today. And when, we all graduated from college, you could find a home for 1 to 300,000. Those don't exist anymore. And so if we're not replacing that missing middle or that missing lower quadrant, this affordability issue will continue, and rent control is not the answer. And, limiting institutional ownership's not the answer. It really is about supply and creating more supply. The poster child for what supply can do is Austin. So if you look at Austin, in the last 5 years, 1 out of 4 apartment buildings were built. Like 25% of the existing stock is
Right.
less than 5 years old. Like, that is a staggering statistic. But if you look at what the rents are there, it's become more affordable. So more supply puts downward pressure on rents and creates affordability. And that's really the challenge we have across the US. You don't want all of that supply to happen at once, but we do need it in order to create housing for, the American.
Yeah,
Right.
they say like developers aren't smart. They just keep developing until someone tells them to stop, and they don't know that the prices are going down, right?
Right. And I feel like it's the podcast that we had with AJ there, thinking about that middle and motivating the people who are in lowercase a affordable to get into that. I mean, the uppercase to the lowercase it feels like it would be such a wonderful push just for our world in general. Do you have, I'm not going to ask you about your politics, but as a firm, do you find that you have to do a lot of lobbying and work with political groups in order to be able to get your stuff done?
We don't.
Okay.
Some of our operating partners do get involved in that, and we're very thoughtful about you tripping anything that would be an issue with any of our investors. So we don't get involved in it, but we are, we're members of the National Multifamily Housing Council. My partner Greg is on the Affordable Housing Committee, so we're in the know on what's happening, but not, politically active around it.
Well, Jen Clausen, we were just discussing NOAA, but now we're going to discuss because you just sat down on the hot seat.
Okay.
Dun, dun.
Jen could talk to anyone about anything. I think she's fine.
You think? I don't know.
I
I'm a little scared
think
for her.
so. So, first book or podcast recommendation, anything you're currently enjoying?
Besides the Beyond the Resume podcast, which has become a new favorite, I was just turned on to a podcast called Acquired, which you probably are familiar with.
Love.
Heard of
And
it.
at first I was intimidated because these podcasts are like 4 hours long. I'm like, who has 4 hours
Ooh.
to listen to it? But a friend recommended first the LVMH one, which is all the history of Louis
Oh,
Vuitton,
yeah.
and then the Hermes one. And it was really amazing because 7 hours later, I learned about two very distinct approaches to, luxury products that was really interesting, and the founder stories. So that was awesome. Book I read recently, and I lived in New York for 7 years. Anderson Cooper's history on the Astor family, and it was so fascinating because I'm in real
Oh,
estate. I love like connecting place to story, and it was just really fun to kind of relive my time living in the Lower East Side and what those areas were back in the day when the Astor family was kind of at their peak.
You know what? You have to watch
that's
Love
so
Story.
fascinating.
Have you
Which
seen
one?
Love
Love Story?
Story yet?
No. What?
It's
Tell me.
about like the Kennedys in the 90s, and it's like a very New York, like
Yes.
you'll enjoy
Okay.
it.
Love it. Love it.
Really?
Yes.
With
Well,
John Jr.?
John Jr. I feel like especially for a woman, but for somebody who grew up in and around New York, it just like it has a very like I think it has like what the Astors have as a past. This has as like, oh,
Mm-hmm.
I lived during that moment.
Contemporary story. Yeah. Cool.
I gotta check that one. I saw that one. I gotta check it out. I assume you're extremely busy. What do you do? I like to find out, what do you do outside of work? What do you
I
like to
play
do to keep you like, what do you do? Is there something you do daily? Like there's things I do daily that like keep me sane.
Well, originally you'd ask me like, what's my morning routine? And I had a lot of fun thinking about how to answer it because what I'd like it to be is, I wake up and I spend 20 minutes doing meditation and stretching. And then I have my coffee and it remains hot while I drink it. Um,
Yeah.
but life is real. And so I don't have that on a daily basis. It's very different. I'm, at times hairdresser to my 11-year-old and my 7-year-old, and then working on getting them dressed and being all that. But what I do for myself is I play racket sports and I have a trainer, and that's my moment where I just get my stress out. And been a huge player of tennis and more recently padel, which is a sport
Yeah.
that's
French, right?
it started in Latin America, actually. I think it was
I did it.
Chile or Mexico. But our club here has 4 courts that are always full. And it's just so much fun because it's a combination of squash and pickle and tennis all together outside.
I got to get in that because it sounds cool. Like, it sounds like the hipster pickleball. You know what I mean? Like,
Yeah.
I
But
don't
it's
listen
better.
to,
It's not an
yeah,
annoying sound because pickle is just that really annoying sound. And you have to have some talent. Pickle, I feel like you can kind of hack around and do okay.
I'm a
Which is
hipster. I
why
don't
I
like doing
love
what everyone's
pickles.
doing.
Too. I mean, don't get me wrong, but
I have
if you
no
want to step up
talent,
the
but I'm
game,
pretty good at it. So I'm sure you've
Pickleball,
hired.
making a lot of uh, physical therapists very rich.
true. Yeah.
Oh yeah, that's for sure. So I'm sure you've hired a tremendous amount of people in your day. What do you look for when you hire, especially somebody? I mean, obviously, if you're looking for a senior executive, you might need more skill set. But when you're hiring younger folks, what do you look for?
It's a tough one today. So when we're hiring, and we were talking about, transitioning to leadership. I've also had to let a couple of people go, and that's been really challenging. You learn a lot from those experiences as well. Um, I think on the hiring side, cultural fit is so important. And knowing, especially for a smaller, like entrepreneurial size firm like us, a cultural fit has to be really on spot on, and there can't be any questions on that. And so we spent a lot of time really getting to know the person, not only in the interview process, but also let's go have lunch, let's go grab a drink, like really understanding, is that person going to be a fit for us, and knowing how they interact with different types of people. So even if I'm not going to be working with them directly, I'm spending time with them, and so is my team. So I think that's really, really important. And having an interest in being there, not just for having us be a stepping stone to the next place. So I think those are really important. And having, some sort of passion about this industry that we know is going to move them to the right direction. On the deal side, it's very important for us to have people that can connect with people because we work with operating partners, and that is an interesting balance because you're selling to our internal investment committee, but you're also selling to that operating partner, and being able to manage that relationship is not everybody has that skill set. So that's something that we're really thoughtful about.
A
Yeah, and
decade
a small team. Yeah, it's a small company, not like a huge company, and you got to like a lot of our job is is assessing personality fit when we do like searches. It's like we want to meet the whole team because it's like you can get the resume as the 10 check marks, but it's like there's so much more than that, right?
Yep.
Right. I was saying,
100%.
and you'll see this in like 10 years or so, my kids' friends are all entering the workforce. So it's interesting because I see, and it's like, well, what would make somebody successful in this role? And you kind of know the person from kindergarten. And I'm like, look, I feel like I at least have to help all these kids find the right jobs because I know exactly where they belong based on the personality they've had since kindergarten.
That's actually awesome that they have you in their corner because you can really help them.
It's so much fun.
This is younger generation. They've grown up with screens. Like oh my gosh. I was chatting with a team member and she said that she and her friends will go out to dinner and they'll do like Rochambeau of who has to go up to the hostess because they don't want to. Like they don't want to say, hey, I have a reservation under Jen.
Mm.
Like they're intimidated by that. And so that is something we definitely screen for. Like you have to be able to talk to me, come into my office, even if you're not working with me on a daily basis, because I think they just don't learn that the same way we did.
Yeah. I think we might have to cut out the part where Lisa says she's trying to place kindergartners. I don't know if that's legal.
I think she said that they were kindergartners.
Now they're all college graduates.
Okay, perfect. Even that's better. Jen, you mentioned your father is seemingly as a mentor. Like, what mentors have you affected you during your career and life? You want to give mention to?
Yes, they've all been men, which I think is a reflection on the industries I've been in: finance, commercial real estate, and coming out of after school, my when I worked at Cushman and Wakefield in San Diego when I was an office broker, I had a guy who I had lunch with him 5 weeks ago when I was back in San Diego. He is an first class of the Top Gun class in San Diego. So he was one of the original Top Gun OGs. And he taught me the commercial real estate office brokerage business. It wasn't driven by the commission. It was driven by the relationship. And I think that really set me on the course of how I do business. Obviously my dad, who was, very successful salesperson for 55 years in the life insurance business, learned a ton from him on resiliency and relationships. He always taught me, go have lunch with someone and ask them everything about them and make them ask you, well, so what do you do and why are we here? Right? Like, don't lead with your pitch, lead with establishing a relationship. And I think between the two of them and having only had male mentors, it's really inspired my involvement in our industry and women. So I'm on the global board for women in real estate. And I'm also on the Philadelphia chapter board. And it's really a way to connect LPs, GPs, consultants at the senior level and at the more, rising leader level. And it's really important for me to help develop that next generation.
Lisa's very involved with women organizations, so maybe she can get involved with some
Cool.
Philadelphia ones too.
Love that.
I would love to. And as a matter of fact, one of the things that's very interesting that I've been working on is I'm on the board of a few of these women's organizations, but helping younger folks to figure out which ones they might be interested in getting involved in, because there is no like, let me help you based on who you are as a person. And then I also think that middle generation where it's like, all right, you've kind of done the doing. Now you're a manager and you need to kind of what got you there, what here won't get you there. And you need to kind of grow. And I think that the organizations need to be a little bit stronger in that middle, like mentorship. So yes, I'm going to reach out to you.
You want to be a sorting hat from Harry Potter, right? The sorting hat.
Exactly. That's a great analogy. Yes,
you're
definitely Slytherin and you're not Gryffindor.
No, we're gonna Hufflepuff our way out of here.
Exactly.
How about that? And it was great getting to know you better. We've spoken a few times before, and you're a wonderful person and great. Yeah, I'm glad. Thanks for coming on here and helping the next generation of commercial real estate professionals.
Well, thank you guys. I really appreciate the opportunity to share my story, get to know you guys better, and I hope you have a fabulous day.
You're going to be on so many more podcasts after this.
I know. Now that the floodgates will open.
Thank you for listening to Beyond the Resume, a Jackson Lucas podcast where we take a deep dive into the career journeys of some of the top minds in real estate and equip you with the knowledge to move forward in your path towards the success you've envisioned. Make sure to like, share, and subscribe to Beyond the Resume. We're grateful for your support. All episodes of Beyond the Resume are brought to you by Jackson Lucas, building inclusive and diverse businesses through talent acquisition. Visit us at jacksonlucas.com.